Q2 2018 Morphic Global Opportunities Fund returned around 1%. The Morphic Ethical LIC was around about flat. That was against a global backdrop of markets rallying 4%, of which most of that was actually down to a falling Australian dollar. Within that global mix, the US was the strongest performing market, up around about 5%, and emerging markets were down around about 10%, primarily led by China. In terms of the funds, our biggest performers typically came from pairs trades where we were long companies against short another. That took out a lot of our market risk, which was particularly beneficial in Asia. Any names that we were short did very well, and on the detracting side it was names that we were long that had a strong link to China or Hong Kong. In Q2, the US was the strongest performing market as Trump's tax cuts continue to ripple through the market, and we're seeing earnings upgrades there. The economy is performing very well. It's a very strong and resilient uptick is still ongoing. And then counter to that, we had China, where tightening in lending combined with an escalation in the trade war has seen very weak equity market performance. The biggest detractors typically came from stocks that it wasn't actually stock specific news largely, it was market news. So we had a name that we really liked, China Everbright, that was one of our biggest detractors, and that was really because it's in the Chinese or Hong Kong stock market that it saw such weakness. Our risk management policy is that if an investment suffers more than a certain amount of loss, we exit it, we move into a cooling off period, and we'll likely be back in that name. But for now, we prefer to stand back and let this play out. We think markets will continue to be in this cross current. On the positive side, you've got solid global earnings, you've got really still continued good economic data, and then against that, you've got the political news flow. So for now we see markets globally in a range, and we expect that to ultimately get broken to the upside. We believe that Trump is still escalating the trade war at this stage, but it will ultimately result in a resolution, and at that point the market can get back to focusing on the underlying earnings outlook, which remains solid. We think there's at least another couple of years left in this global expansion.